When we're constantly looking for these shortcuts, we are skipping, I think, some of the educational process to help us mitigate these risks. To me, that's where the too good to be true comes in, is we're looking for a shortcut. We're looking for the cheat code.
We've all made some dumb money mistakes. Some of them small, some of them painful. But today, we're going to break down all those money mistakes and more so that you can learn from them and hopefully avoid them. I brought in 3 guests, my partner, Mr. Joey Murray, the retiree, Mark Haraguchi, and the pastor, Jonathan Day, to help us think through this. So the question is, what's the dumbest money mistake you've ever made, Joey Murray?
Oh, me? I mean, I don't know if you have time for me to go down the entire list, but probably one of my favorites was buying a stock, penny stock, back in the day before I understood anything about financial freedom. It was on one of those things is kind of the back of the room. Hey, Joey, I got to share this with you, man, because be honest, like when this thing hits, I don't want to feel guilty that I didn't tell you about it. So you got to buy into this diamond stock, CMKM diamonds. It's going to go to the moon. They've already found them. It's in Africa. You got to get in on this deal. And I am the proud recipient of like tens of millions of shares of a worthless company that probably never even existed. So that was my dumbest thing I've ever done.
Okay. I would have said 100 unicorns, but okay, we'll let you get away with that one. Mark.
Nope.
Dumbest money mistake.
I'm going to go with lending money to someone to invest and not placing a personal guarantee against it.
Ooh.
That was pretty painful.
So they defaulted and you had no way to go back after it.
It just created more of a challenge. We were able to get a part of it back, but what I learned from that is there's got to be some stronger guarantees inside of it, not just a contract, not just, supposedly backed by real estate, but there needs to be something else with some teeth in it. So I'm coming after your house next time.
If you've listened to our show for any length of time, you've heard us talk about infinite banking and how we were able to use that concept to create over $50,000 a month in passive income. But it's just not that easy to figure out, how does this all connect into my own personal system?
Stallion, that's why we created the passive income operating system, bro. It shows you how to turn active income into passive income. It makes all the steps come together. If you would like to get access to it as a podcast listener, we've never given this away in public before. Go to what'swhatwallstreet.com/PIOS.
All right. Jonathan Day, worst money mistake made.
Well, unfortunately for me, there's a competition at the top of the list. There's more than one, but I'm going to go with not just investing in a Ponzi scheme, because I really did some good due diligence on that deal. My money mistake was putting all my eggs in that basket. And I didn't put all my net worth in that deal, but I put just about all my cash and all my access to cash in one deal. And boy, when that one deal goes bad, why there's an old adage about it.
I'm going to share one that is recent, and maybe that's the reason why I feel like it's the worst one, right? Like the most recent things I think we tend to spend our time like dwelling on. And we had a lake house that was fantastic, loved every minute of it, bought it when the market was low. It did everything I wanted it to do. And for some reason, I decided that it wasn't enough, right? I allowed Parkinson's law to creep in, and, went on some trips, experienced some fancier things, the idea that a luxury once enjoyed becomes a necessity, and thought, man, I should make this lake house not just for me and what our family wants. I should make it for everyone else. I should allow all these other people to participate in it. And in order to do that, I had to get a better lot, which meant I had to get an architect, which meant I had to have a builder, which meant I needed to spend way more money than I should have. And I sold a house that I bought for $900,000, sold it for $1.1 million. You thought, man, that was a great deal. Problem is that house appreciated probably another $1 million over the next 2 years. And I gave up 3 summers with my kids building this new lake house. Worst money mistake I've ever made, because those 3 summers I can't ever get back. And I think if you think about what we're trying to accomplish in financial freedom, it's really gaining back our time. We can't get back what's in the past, but we can only get what's in the future. And I made the mistake of postponing time with them that I can never get back. And that would be a decision. That money I can make back, time I cannot. So for me, that was the biggest mistake. All right, I want to come around to you, Joey. I want to talk about, you've worked with, I don't know, hundreds, if not thousands of people over the years, helping them try to get their finances in order. Back even when you were in the mortgage business, helping them. What's the number one money mistake you see people making over and over again?
Well, I'm going to stick to, it's more of a mindset that drives the money decisions. And it comes into this idea of retirement. Retirement is predicated on the idea of accumulation, not cash flow. So people will actively and knowingly put themselves in positions that stymie their cash flow every month by increasing their monthly mortgage payment, or by paying extra on their student loan debt to try to get it paid off faster, or by putting more money into things that they can't touch or gain control of, like 401ks and IRAs, to try to catch up towards this mystical mountain of cash that they need in order to, quote unquote, retire well. And I think that there's a multitude of effects that come from that, but they all leave you feeling out of control and no closer to financial freedom, which we all want today, but we've bought into the idea of deferring that until you're 65, 70. And that is I think just the money mindset, the Wall Street mindset that leads everybody to that.
I love that. Mark, a lot of people make financial decisions based on emotions. In your experiences, how do emotions lead to dumb money mistakes?
How do they not? We're talking about fear, greed. These are things that are going to cause people to make impulsive decisions. Panic selling, chasing a hype. You're chasing. Someone posted inside of our chat here that you're going off of a surefire tip. Boy, if I don't get in on this deal, I'm gonna miss the train. I'm never gonna be able to let myself live it down. So you're avoiding smart risks. You're just leading to financial loss because you're just jumping in headfirst and you're not really thinking about the consequence. You're thinking in a fear-based mentality. If I don't do this, I'm going to miss out. Or the reverse is you get into turtle syndrome, where you're so fearful and you're petrified that you just shrink and you evaporate inside of your shell.
No doubt. I've seen all those things and more. So Jonathan, when it comes to like one simple financial habit that you feel like could prevent most people from making major money blunders, what would that be?
Well, I think the major money blunders come from the small money blunders. And one money blunder that people commonly get into is they just don't have any kind of personal P&L. They have no idea how much money's coming in. They have no idea how much money's going out. And they have no idea what the difference is in that amount of money. So they go to work, they're in the W-2, they're in the rat race, they believe the Wall Street lie that says, give us all your money. So all your excess cash gets locked away. And then now you're just a cog in the machine, that goes to your blue collar job, and you produce the wealth. And then the people with the assets get to scrape that off of your living through inflation. It's a big game. And if you're playing that game to lose, then you're definitely gonna lose. The first step to building wealth is keeping control of your cash, right? So have that personal financial statement, that personal P&L. Keep control of your cash. Move that money from your active income to your wealth generating system, your wealth building system. And that's gonna be that small habit change at the beginning that's going to keep you from big money mistakes at the end.
Buying assets to create cash flow, avoiding FOMO, thinking of your personal finances just the same way you do your business. Great ways to avoid those common money mistakes. All right, let's talk a little bit about the too good to be true scams. Oh my goodness, scams. We could probably have a whole episode on scams, Mark Carducci. There's these scams and get rich quick schemes that we find everywhere. Why do you feel that people keep falling for them, even when all the warning signs seem so obvious?
If I was to take a step back, I firmly believe what it is people are chasing shortcuts because they lack financial education. Everybody wants the easy button, right? We're seeking instant gratification. Russ is a big fan, apparently, of Grubhub or DoorDash, and so he wants his food and he wants it now. We are the Amazon generation. We don't want stuff, a week from now. We don't even want it 2 to 3 days from now. We want it yesterday. So when we're constantly looking for these shortcuts, we are skipping, I think, some of the educational process to help us mitigate these risks. To me, that's where the too good to be true comes in. Is we're looking for a shortcut. We're looking for the cheat code. If for those of you that are old enough and Nintendo, up, down, down, left, right, BA, select, start. That's how you got 100 lives to start the game. That's how you cheat.
Oh man, Joey, you've heard a lot of stories of people losing money to bad investments or opportunities they may have caught them to start out with. What's the worst case you come across?
Well, again, as Jonathan mentioned, there's a race to the top on this one. And this may not even be the worst, but it's definitely one that I've heard over the years and thought, man, this is a terrible place to be. Someone's super driven to leave their 9-to-5 or their professional career. They put not only all of their money that they're trying to get out of that job to create cash flow, they also raise money from friends and family into the same Ponzi scheme. So it's not only this idea of, man, I get this tax benefit, I get this cash flow with this. It was a too good to be true situation to begin with, but they were so blinded by the idea that this is my way out. This is my eject button, that they put all their eggs into one basket, as Jonathan mentioned. And man, what a setback that has become for them. And there's many different reasons, but man, getting blinded by returns and the tax benefits that, we heard the tax tail wags the dog. That's exactly what happened in this scenario.
Well, so what you said there, I think needs to be repeated, is that the worst case scenario is not you lose money. The worst case scenario is when you bring and drag other people into the deal with you.
Correct.
That's when it really hurts. Because here's the thing, as investors, we're going to make mistakes. That's just part of it, right?
Right.
But it's the thing that hurts the worst is when we bring people into it. So for every one of us who are on this call and listening to this episode that has made a mistake, we recognize that. For every one of us who've brought other people into it, now we have an opportunity. We don't have the privilege of sitting back and woe is me. We got to get busy. We got to start working to overcome that. We've got to double down in order to help us and those who were with us in the past get back that money. And I think it's on us to do that. I feel like there's an opportunity. All right, Jonathan, when it comes to passive income, people love the idea of the quote unquote easy money, right? So what's your advice for someone trying to spot a real opportunity versus a scam?
I think it's to take the blinders off. Exactly what you guys have been talking about. I would just have to echo that. There's an organizational psychologist named Carlin Borchenko, and she has a quote that has just always stuck in my mind. People are human beings, make decisions emotionally, and then we justify them rationally. You can apply that across the board in human nature. And so if you can just kind of recognize that about yourself, okay, hey, I like the glitter. I like the positive returns that I'm getting out of this. I like those things. And it's our human nature to kind of just say, okay, now I'm going to look for reasons to back up what I already want If you can just say, okay, in a chastened way, I'm going to say, here's the kind of person that I am. Here's the kind of person that every person is. I'm going to back up and I'm going to ask legitimate questions. Russ, one of the questions that you taught me right after this ordeal that I mentioned earlier, you always need to be asking the question about every investment, how do I lose all my money? How do I? And so don't just ask the questions about how high does the ceiling go. Also ask the questions about how low does the floor drop. Those are equally valid questions. And I think by just taking a step back, realizing that what you want is to shortcut, like Joey was saying, you want to jump to the end. You want to skip out of the rat race. You want to go from now to, it might be a 5-year process or a 10-year process to get truly financially free or to live that life that you want to be living. And in the back of our mind, we're saying, how can we get rich quick rather than how can we really go and build wealth?
Yeah, I have a friend that has a saying. He says, if it seems like a no-brainer, like, it's just like, oh, this is a no-brainer, I should totally do this. He said, that's when you get a second opinion. Like, let that be the thing in your head. Like, if this seems like a no-brainer, get a second opinion. Because sometimes we do have this confirmation bias, kind of to what you were saying, Jonathan. Like, we can start looking for information that's just reaffirming what we already want to be true about it. And then we discount what anybody or any dissenting opinion would have. I'd say an upgrade here too that I've learned from some experts, people that are doing thousands upon thousands of transactions, is that every time I ask them, what's your secret? They say, look, I'm looking to hit singles, maybe every once in a while a double, never triples, and absolutely no home runs. And that tends to fly in the face of the way that we think about investing, doesn't it? We like to get into investing for the home runs. We're looking for that big deal. The problem is with big deals is that we get suckered into bad deals, not big deals. So the way that you avoid that is that you build yourself out an investor buy box. And if you don't know what that is, you need to get on a call with one of these coaches and they can help you work through that process. You go to what'swhatwallstreet.com/free call. That is a big key, is helping you becoming better investors. Because see, there's no good or bad investments. They're truly just good or bad investors. The investments that we make were scams weren't investments, right? Just shame on us. We weren't better investors to understand that they were scams and they weren't true opportunities. I say that we have to work out our investor knowledge, build an investor buy box that's so stinking tight that we're such experts in that one core area that we will spot a counterfeit anytime it pops up. But it's when we don't have a tight investor buy box, when you want to do all deals, and I am 100% guilty of this, is that you allow your expertise to be, diluted down to a level that you can't spot the counterfeit. All right, I'm going to come to you, Stallion. Let's talk about mistakes people make with investments. A lot of people are trying to create passive income, but end up just creating another job for themselves. I know that this is an area that you're always hammering home to me when we're looking at an opportunity. What are the biggest mistakes people make when trying to build cash flow?
And I'll tell you, Russ, it's just about bringing the future to the present, right? Whatever I'm trying to build today, I recognize there's going to be things I have to put in. Maybe it's time, effort, energy, resources to begin with. But if the end result of whatever I'm going to invest in doesn't have the cash flow to support hiring my replacement, then I've really just bought myself a job. And just a very simple example would be how people buy long-term rentals sometimes. They'll get into them thinking, oh, well, this thing has $300 or $400 of cash flow, but they're also the only ones managing that rental property. So they haven't factored in that there's a 10% roughly management fee that they should be paying someone to manage it. Otherwise, it is their job that they've created. And I think, if you do that, now the margin is gone, you don't have an option but to manage it yourself. I think about some of these online businesses that we're buying right now, these content websites. I've just done that with a partner, and I told him from day one, I said, And we're going to have to get a virtual assistant who can manage these from day one. I don't want us to be thinking about this 2 years from now, 3 years from now. I want us to do it today so that we can stay above the business, be working on the business, not in the business. And the cash flow of those businesses more than supports that management structure from day one.
There was nothing worse than walking into class when you're in school and the teacher saying, "Pop quiz day." Why? Because you were unprepared. Are you unprepared, though, for financial freedom?
Don't be. Find out how close you are by taking our 30-second quiz at wealthwithoutwallstreet.com/quiz.
Tribe, if you're still searching for what is going to be that passive income source that's going to push you over the hump, it's going to help you become financially free, head over to the Art of Passive Income podcast, where our friend Mark Podolsky breaks down his amazing land flipping method.
You've heard us talk about how this one strategy has created over $30,000 a month in passive income for Russ and I. Do yourself a favor, wherever you listen to podcasts, go hit the subscribe button to the Art of Passive Income podcast today.
By the way, Trav, if you're learning that Joey's buying content websites today, I am too. And I don't know if I have, envy or anger. I don't know how to feel about this. I was not presented with an opportunity to participate in this, to say it's a good idea or bad idea. I don't know. I'm just feeling a little off on this, Mark. So, not to take up the whole time, calling Joey out, I'm going to move over to you. So, Mark, real estate is a huge wealth building tool, but people still get it wrong. What's a common mistake you see real estate investors making that hurts their financial freedom?
Well, there's a couple tenets of real estate. First is location, location, location. And when we start talking about real estate investors, when do real estate investors, the wise ones, say that they make their money? Is it on the buy or is it on the sell? Smart ones say it's on the buy. So one of the fallacies that people get into when they start looking at real estate is they're buying it for appreciation. Oh, well, if I would have bought Russ's lake house, it would have gone up by X amount of money in the interim. Or if I would have bought that, if I buy this, it's going to go up because they say it always goes up in value. Well, let me tell you a little story of value evaporating. Appreciation is only there, and the value of a home is only there if you can find someone who wants to actually pay that price for it. So I was getting ready to sell a condo in Honolulu. We had come out of 2008. So after I had lost a whole bunch on that purchase, because nothing like buying right at the top and then having it all come crumbling down. So we turn around, we're getting ready to sell it, and my realtor comes up with a number. He says, based on the comps, this is what's going to work. I said, fantastic. I didn't buy it for appreciation. I bought it for use and other reasons, cash flow. Before he could get home, his 15-minute drive home, a neighbor 2 doors down decided to list his for whatever price. $30,000 of value evaporated in that moment because they priced it $30,000 lower than what the market comp was actually going to be. So if you're buying for appreciation, you really are rolling the dice. You're hoping that someone is going to see the exact same value in that moment that you see. So I think that's one of the big mistakes that people make when they're getting into real estate is you're looking at it from the wrong perspective. Does it cash flow? Does it work? If there's appreciation, man, that's gravy. That's just extra.
That's good. Jonathan, I want to put you back on the spot. We obviously started off talking about some of the worst money mistakes we've made, but I want people to learn from those mistakes. And since you coach so many people through this journey, helping them think through the right next thing and what is their investor buy box? What is their investor DNA? How do they make strides? I'm sure you're using personal examples to talk about, hey, let me share a mistake I made along my wealth building journey that you can use and learn from. Would you share one more if you got one in the storage bank for us?
Oh, you can ask me this question all day, Russ. Yeah, I think I'm just going to echo what Mark was saying at the beginning. People like shortcuts, and I like shortcuts. We all kind of like shortcuts. My boys, as a dad of boys, I have a daughter as well, but she doesn't quite fall into the shortcut trap. My boys do. I don't know. Other boy dads can probably testify to the laziness of their sons. But whenever I catch my boys being lazy, I usually don't say, "Man, you're being lazy. Come on over here. Let's do it the hard way." the way that I coach my sons on how to do this is I say, son, I love that you're thinking, but you're not being lazy enough. If you don't think you have time to do it right the first time, what makes you think you're going to have time to do it again? And so I'm trying to coach them to think long term, to think systems over shortcuts. And so one example of this for me is I thought I was going to take a shortcut one time. It was back in my early days investing. I figured out how to do some tax lien investing, and I ended up getting a couple of properties when the county gave them to me. Well, I decided, well, I'm probably not going to get this house anyway, so I can probably just go on Google Maps and see what this house looks like. So I did that. I get the property. I show up to the house, and it looked nothing like photos on Google Maps. Turns out there had been a fire in the house. Part of the roof was missing. There was water damage. I walk in the house, and the brick walls were literally bowed out, which meant I probably shouldn't be in there long because the roof is going to be falling in. So from that point on, I decided that there needed to be some system improvements, not just taking shortcuts to really get the desired outcomes that I want. So we always need to prioritize good, solid systems based on outcomes over shortcuts. Dabo Sweeney, who you know, I know, like, and trust, he always says there's no elevator to greatness. You have to take the stairs. And so put the work in, build the system. You can definitely make your life easier, but look for that next level laziness. Don't just settle for the first level.
Yeah, a guy named Roy Vaden wrote a book called Take the Stairs, and I started following that in airports, and boy, you get some funny looks. So you started getting on the stairs, and there's all those escalators next to people. They're like, what are you doing? All right, that great insight, right? Joey, you talked about bringing the future to the present, right? Thinking about how are you going to use this business? How are you going to get yourself out of it? Systems over shortcuts, not considering appreciation. Those are major opportunities. I also think, we need to be considering how many deals are we seeing as compared to how many are we doing. For some people, they need to set a number much bigger than they want to. For some people, they need to set a number smaller than they want to, right? If you're very analytical, you probably want to see 100 deals before you do one. And early on, you need to do a couple of deals to learn from them. So maybe that number needs to come down to 15 or 20. If you're somebody like myself, you probably want to see a deal, do a deal. So maybe you need to get a deal up. You need to see 10 deals before you do one deal, right? Like, as time goes on, you build out that process a little thicker. But like I said, when I'm talking to people, I truly see the most expert people in the space, in whatever area they are, they're usually seeing 100 deals for every one deal that they're doing. And these are people doing thousands of deals. So that means that shows you how many that they're turning down, but they also know which ones are nowhere close to where they need to be. All right, so let's talk about how to fix some of these mistakes. Joey, for someone listening who realizes they got some of these mistakes, where should they start to turn things around?
I think it's the same thing you and I learned the hard way. Looking backwards is where we've developed the investor DNA profile. If you haven't done that, it is a cheat code. It is literally to take into consideration, who am I as an investor? Because there are no good or bad investments. There's only good or bad investors. And it starts with you lining up with those actual investments from the way God created you to see the world. Are you going to be fired up about this investment, or are you just chasing the rate of return because somebody else said that it worked for them? There's numerous examples of times when we've invested in something and just weren't excited about it, whereas it was like the bread and butter for somebody else. And so you have to figure out which ones line up with you, and you will be able to go much, much faster on this game of financial freedom if you do.
So good. Jonathan, if someone is in deep financial mistakes right now, maybe they're deep in debt or maybe bad investments, what's the first step to getting back on track, would you say?
I'm going to go back to the human nature conversation. I think for a lot of people, regardless of their situation in life, whenever they get into a position where they feel like a failure, the easy thing for them to do is to keep their head down, keep the blinders on. I don't want to confront reality. I just want to go on living as if it didn't happen. And so you can get into a shame cycle. You can get into a failure cycle because it affects your identity. And I think the number one thing to do is just to confront reality. Get your budget out, get your documents out. If you weren't keeping up with those things in the first place, go ahead and take the course, do the thing that you got to do to get those numbers in front of you, get that P&L positive. Now that's only a short-term step, right? Because we really want to work on, ultimately, we want to get the passive income side of the equation back up. But you can, in intermediate sense, excuse me, I'm talking like Russ over here. We can reduce those expenses for a little while until we get there. But you're not going to reduce your expenses out of a situation where you're really in bad trouble. You're going to have to build wealth. You're going to have to put some positive to that system. So you can go take on our website. You can take the automated budget course. You can really confront what's really going on, get your systems and your numbers under control.
Jonathan, all you try to do is endear yourself to the audience by not having perfect words, right? Being able to not only come up with them at the same time, at the right time, but the wrong words in the wrong places. All those things, man, it's led to 2 million downloads so far, man. Like, it's a balancing act, right? It's a balancing act to be this good and this bad all at the same time. All right, Mark, what's one simple mindset shift that can help people make smarter financial decisions?
I would challenge you to stop thinking like an employee and instead think like an investor. Meaning, let's plan for the worst of times so that you only know the best of times. Right? If I took a look back at all of the failures, if you want to call them, learning opportunities, if you want to call them that, educational moments, if you want to call them that, if I was still an employee, I probably would have looked at that and been, you know what, there is absolutely no way I'm ever doing this ever again. So I'm just going to go bury my head and just punch the clock and hope for the best. Whereas the investor mindset says, man, that's horrible. Okay, number one, what can I learn from this? How did I dig this hole? How do I dig my way out? But I know I can dig my way out. So with a couple of the Ponzi schemes in the last couple of years that I have unfortunately found myself magnetized to and attracted to, my wife asked the question, are we going to be okay? And I said, yes, we are. This is a bummer, but we can make it back. Like you said, Russ, we can go out, we can make more money, we can get creative, we can think differently. Whereas I think a lot of times when we are shepherded in the employee mindset, it's more of, well, you just better hope that the boss can figure it out and you can get paid, because that's your only avenue to fix this mistake. And that's why I want to challenge you. Start thinking outside of that box.
Mark, it's so good. And I think there's so many lessons that could be learned from that as people start to really consider their own mindset. Russ, talk a little bit about your biggest lesson, if you had learned it 10 years ago, so that you could help the next person leapfrog your own timeline.
So if I had to go back 10 years, what would I do differently based upon what I know now? Man, I would invest a lot more money in my financial IQ. And that's saying a lot, given that I've invested a lot of money up to this point. And even prior to 10 years ago, like being that I was the only one in the, out of the four of us that was a professionally trained investor, or supposedly, right, having a certified financial planning background, financial advisory background. Like, I'd taken all of those certifications and studies. But you know what? I was not in a room of investors on a regular basis. I would go back and join way more masterminds. And one of the guys in our mastermind says this, and I love repeating it, is that you're in the right room when your aspirations are the daily accomplishments of the people that are surrounding you. And let that sink in for a second. Like, if you're sitting in a room and you're like, man, I want to accomplish blank, and everyone in that room is already accomplishing that very thing that you want to accomplish, what is the likelihood that you're going to achieve it? High or low, right? But put yourself in a room where you're like, I want to accomplish blank, and you're surrounded by people who've never done it either. What's the likelihood of you accomplishing it? Higher or lower than the first section? So for me, I would have gone back and gotten a lot more rooms like that, because what I have found is just being stretched to see things 10x greater than where my mindset would have been, right? When you see someone who sold a business for a couple $1 billion, you see somebody running a $20 million profit business, when you see people who are doing hundreds and hundreds of deals every single year, like you start to go, oh, I'm thinking too small. And I thought I was thinking big. But the reality is that my circle was not big enough. Like the way that they were thinking. I saw this the other day. It said, you can't change the way people think that are around you, but yet you can change the people that are around you and how they think. And I think we need to potentially sometimes change our surroundings in order to think bigger. So long-winded answer to say that's what I would have done if I went back. So same question to you, Stallion. If you could give just one piece of financial advice that you wish you would have known 10 years ago, what would it have been?
I'm going to challenge you right now that if you're playing defense only, you will never win. And the idea there is you've been trained your entire life. I think our education system is part of the problem. It's to say, if I don't hit 100%, then I've failed. I've missed the mark. And so therefore, I just don't take unnecessary risk. I don't want to lose. But in the game of investing, there is no way to get to 100% every single time in everything that you do. If the fear of failure is keeping you from becoming an investor, then here my challenge to you is a little term they call the expectation effect. Okay. If you go into this game of becoming a better investor with the expectation it's going to be hard, that you're going to miss, you're going to make mistakes along the way. When you actually get there, you've probably built it up bigger than it actually will feel, and you'll start to see that success. So make the mindset shift that part of the journey is making the mistakes and part of the journey is making the failures, because that's how you become the best investor.
Expectation effect. I like that a lot. Mark, what's one piece of financial insight that you wish you would have had 10 years ago that you know now?
All right, go back 10 years. You're going to do a multi-parlay bet that the Chiefs are going to do a 3-peat. Taylor Swift is going to be dating Travis Kelce, but the Eagles are going to win the third time that they show up. That's my financial advice 10 years ago. Can you imagine that bet today? Oh my gosh. No, in all honesty, what I would say is it's how you handle the losses that give you the knowledge to find the wins. We are all going to lose. Nobody bats 1,000. So how do you handle it when you lose? What do you take away from that? How do you build a system like we've talked about? Build systems to incorporate the knowledge of the loss so that the next time you are better positioned for the win. That would be my recommendation.
Well, to that point, I think venture capital has kind of a goal of 40%, right? Their objective is to win 40% of the time. So they're expecting to lose more times than they win. The difference is that they're betting in different markets that give them a chance where the 40% outweigh the 60% that don't turn out. I don't think people do enough deals and give themselves a chance to win enough. Good. I love that point. All right, Jonathan, tell us, what's the one piece of information you wish you would have had 10 years ago?
Well, I think it's information I did have, but I didn't really have it down deep. It's that I didn't really have an expense problem. I had an income problem. A lot of people know my story. 10 years ago, about that time, I was rock bottom, financially, trying to figure out how to make it work. And my mindset was, we don't have enough. We don't have enough. There's not enough. We don't have enough. And it led me to scarcity decisions. I would brew coffee at home and put it in my Starbucks cup and take it to Bible study at Starbucks so that I didn't have to buy, the $4 Starbucks or whatever the price was at that time. It was scarcity decisions like that. It was constantly about figuring out the best deals and the best coupons and the best. And I'm not putting any of that stuff down. Get control of your spending the way you need to get control of it in the moment. But at that time, my thought was, if we could just spend less, we'll be okay. But in reality, that was only a temporary fix. The reality was I needed to make more. I had an income problem, which should have led me and did eventually lead me to exactly what you were talking about, Russ. You got to invest in yourself. You got to do something different. You got to go become a better investor.
Oh, so good. Everyone, this has been fantastic. By the way, if you're not following us on Instagram, we're dropping nuggets like this all the time. If you want access to an ebook that will help you avoid making some dumb money mistakes, go to Instagram, Wall Street, and DM us money mistakes, and I'll send you access to that guide for free. How about that? And that'll help you avoid some of these mistakes. Mark, Jonathan, Joey, thank you so much. Thank you for listening. Hope you found value. Share this with somebody else so that they can avoid making some dumb money mistakes as well. See you on the next episode.
This has been the Wealth Without Wall Street podcast. Don't forget to subscribe to the show to break free of the Wall Street mindset and begin building wealth on your own terms in places you understand so that your wealth will never run dry. See you next episode.